Ahoy there, traders! How are we all doing this fine and dandy Friday morning? As usual, first point of the agenda is thank you. Thank you for taking some time out of your day to spend it with me. Time is the most precious commodity that we all have, so it really is appreciated that you've given me some of your time, so I really appreciate it. With that said, we've got a fun pack session. We're going to do things a little bit backward this week. I'm going to go through the educational piece first. It's going to take 5 minutes, which is why I'm doing it first this week. But we've got our usual workshop planned. And again, my kind of topic is what's your number? For those of you who are, this is new for you. In fact, let's go through the agenda. The agenda is usually about 20 to 30 minutes, up to 60 minutes. These sessions usually last for. Sometimes they go a little bit over, which is just the way it is. We're going to look at the market overview. We're going to review some of the trades that we've had this week. And then the educational piece is don't bet the farm. So it's a nice simple piece, but I just want to put a different perspective on how to look at this. But that's what we'll be going through. So I'm just catching up on the comments. If you've got question and answers, it's been recorded. So if you've got to step out, then you can catch up with the recording later. That'll be posted in Slack later today, tomorrow at the latest. And Loy's saying it's cold here in GA. I'm not too familiar with the abbreviations. I'm trying to remember all my states. Can't quite remember. Anyway, I'm not in the US. I'm in the UK, if you can't tell from my accent. Depends on where you are in the world. But if this is your first time with us this week, again, one or two new names, one or two old names. Again, I can see the room filling up. But if this is your first time with us this week, there we go, George, I thought it might have been. But if this is your first week, I'm not a Wall Street guru. I've not had the privileged upbringing that maybe some people would consider Wall Street gurus to have. I'm just a regular guy. You know, have cracked the code. I figured out what works for me. And basically people started asking me how I did it. And where I'm at now these days is I'm probably what most people would call a lifestyle trader. I get to choose what I want to do, when I want to do it, how I want to do it. I'm not going to bullshit you and blow wind in your sails and say it's the laptop lifestyle and I'm going to be sitting on a beach somewhere. That's not true. That's not my idea of a lifestyle. I like to have a relaxed pace of life. I like to read a book, while away my mornings reading, go in the gym, exercising, just literally enjoying a relaxed pace of life. That's what I consider a lifestyle. I like coffee. I like fancy tea. I like fruity cake. It's my choice. It's my life. So whatever your life is, that's what this style of trading allows me to do. And for most people, what that means is the way that I trade, it means that it can be done around your other daytime commitments. That's what having free time for me. I don't want to spend all day, every day, flicking through chart after chart. That's not my idea of a healthy trading lifestyle. I spent 12 years doing that, and it's not healthy. So quick background is been full-time trading since 2001, hand-drawing charts since the early 90s, been calling the majority of my trades out in real time since 2004. Managed private clients with assets under management of 10 million. I had a fund for a short while is all I'm saying there. Specialized in Forex for 12 of the last 20 years. And right now I focus on stock options. And I've been doing that since 2010 primarily. The one thing that has been consistent through my career is I am obsessed with enabling you to replicate what I do, but to do it in your way is what I'm trying to get across. I like to refer to it as a production line, and you get to turn the knobs and dials. You can speed up the production line, you can slow it down. A little secret blend of herbs and spices is sometimes how I refer to it. You get to add, if we were making a recipe, if we were cooking a meal, you'd be adding salt and herbs to flavor. That's the bit that you get to choose. But it can be replicated, which is the great news. And while we're talking about replication, of what we do. Let's review some of our trades. So we've got some good trades. One of the things that I started doing this week, let's just go back slightly. One of the things that we started doing is, oh, wrong slide. Where's my, we started, there we go, the volume weighted average price, VWAP momentum strategy. VWAP is just the tool, the indicator that we use to help find institutional trading footprints. And we've had some great training. And what I started doing this week was essentially over-the-shoulder training and trading. So you get to see what I'm trading, when I'm trading it, as I'm trading it. And it is a training program. It's a little bit of a two-way process. So we've got some great trades. Monday, there was no trade. And we started our session, so it was just essentially a training day, but this is from Tuesday. Tuesday, using the process that we describe and we've spoken out here in the free workshops. And the strategy outline it's there on YouTube. But if you need some extra help with it, then you can log on and look over my shoulder as we're doing it and get to ask the questions of, like, how do we find these setups? So this is Apple. This is from earlier in the week. This is a CRM. We highlighted this also earlier in the week. And again, nice quick punt on the long side. And we've got some student success as well. I mean, this is, it's not my trade. I don't have the full details, which is why there's some blanks in the yellow background there. But you can see we've got a lovely email. Snap was traded 27% profit in 45 minutes. And what I'm trying to highlight more than anything is when you think about trading and a strategy in terms of a production line, it should mean that you can replicate it and you can replicate it your way. I didn't trade Snap. It wasn't a trade that was on my radar. I wasn't looking at it, but it doesn't mean that it's not tradable. And this is one of the things that I absolutely love. Another student success, I actually missed a BA in the week. I found myself talking. I was doing the live training. It was on the radar. I was just talking as it triggered. And it pretty much, you can see there, it triggered and went to target pretty much in 2 or 3 minutes. So student success, BA worked well this morning. I would have waited 5 more minutes before selling, although nonetheless, quick in and out. About $2.50 per share, based on my rules. Again, I've not got the exact details. I'm just going off the word of our students. And Stuart, again, I don't know if you're here or you're doing something else today, but Stuart had a great trade yesterday. This is another trade. I didn't find this. I'm not gonna, it wasn't on my radar, but this was an awesome trade that Stuart found on his scam that met his requirements. Nice $175 profits, entry setup in the way that we've described here on these workshops. And this one's a little bit of a variation of the pattern, but nonetheless, I'm just trying to illustrate it can be replicated. It's not just like Phil's been doing this 20 years. These people have been doing it 2 days. We started the over-the-shoulder workshops on Monday. By Tuesday, these trades are being found by students. So it can be replicated. And this was my another trade yesterday. This was an afternoon setup for me. I'd already had one trade on this, which was break even earlier in the day. And then eventually it's set up again. And again, a nice little profit there, broker statements on the screen. Again, what I want to do here more than anything is not just shout, look how great I am, because that's not my intention. It's to demonstrate it can be done, and it can be done consistently. It can be done regularly. It can be replicated. And that's the most important part of what I'm trying to do here. So if you'd like a little help with this, again, we're doing weekly workshops. We start the next one on Monday. And so if I offer to help you profit from some short-term explosive stock movements and you want to learn in the smartest possible way, we're going to focus on the best times, the best stocks to trade. It's one simple pattern. You're going to learn it. Although I say in the next 7 days, the reality is after the first day, you'll have this completely nailed down. And we can find extra opportunities. We're going to go through the TTE management system, which is the real secret to success. And again, once mastered, you're going to start seeing results very, very fast. And as you've just seen there, in 2 or 3 days, you will start seeing results. So if you want help to build your trade confidence so that you can transition into the best possible trader that you can be, then send me an email. I don't know if what I do is right for you, but if you want to discuss it, that's all that I can ask from you. This is as hard a pitch that I'm ever going to make you. Phil@AntiVestor.com. Let's start the conversation. We can discuss and see if it's right for your situation. But what I will promise you is you'll never be stressing over whether the market's going to go up or down. You're going to profit from both directions. You'll never be flicking through chart after chart after chart for hours at a time. I just want to zero in, put the trade on, and come back and manage the trade very quickly. We're going to be done and dusted in about 60 to 90 minutes, maybe up to 2 hours, but most of that's just waiting for the target to be reached. You're not actually doing anything, and you'll never be reading through boring company reports. And as I said, if you want some help with these trades and finding your own opportunities and creating your own production line trading, just send me an email, phil@antivestor.com, and we'll take it from there. So that's my shameless presentation. Let's get into the meat, which is why most people are here. Let's go and take a look at the markets and our portfolio workshop. So let's just review the markets and where we're at. In fact, now I'm going to do it backwards this way. I did promise you it takes 5 minutes. So we'll look at the markets in a moment. Don't bet the farm. This will take 5 minutes. This is the educational piece for the week. Don't bet the farm. It'll take just a moment to go through, so I'll beg your indulgence, and then we'll look at the live charts and find something to trade. But what's your number? What is your number? What do I mean by that? Risk is something that everyone talks about. And to separate the novice trader from a professional trader, and all I mean by professional trader is someone who's consistently making trade decisions and profiting from the markets. You don't necessarily have to be doing it as your sole career. You could be doing it part-time. I'll still call you a professional trader. So a novice trader is still trying to figure it out. They may be loss-making. Professional trader, you're doing it, you're making it, and you're getting some results. The difference between a novice trader and a professional trader, it's a lot to do with mindset. The novice trader is essentially betting the farm. The mindset of a novice trader, a new trader, is thinking about how much money you can make. How much money will I make? If I put the biggest possible position size that I can manage on this trade and it works, then I'll make a lot of money very fast. And this time next year, I'll be a millionaire and I can quit the day job next week. That's the novice mindset. How much money can I make? The professional trader is thinking about how little they can lose. It's about capital preservation for a professional trader. How little can I lose? If we were in a business context and we had our shop on the high street, we'd be talking about, let's reduce our overheads. Let's reduce our costs. Let's make sure that our fixed costs are as little as possible so that our profit margins get wider. That's what we do. And if we were talking about a regular business, even if you don't own your own business or you've ran your own business, if I was to say that to you, you're like, yeah, of course it makes sense. You want to make sure that your expenses, your costs, your overheads are as small as possible so that your profit margins are greater. But yet, for some reason, when we dip our toes into the trading world, that logic that everyone widely and globally accepts gets thrown out the window. And the reality is that trading is no different to any other business. We approach it in a slightly different way from the button pushing and the operational side of things. But the philosophy of trading as a business is no different from any other business. So let's think about risk in a different way, and this will wrap it up for us. Let's think about how little we can lose. How little can we lose? So instead of thinking about how much money can I make, how little can I lose? And generally accepted is as a percentage of your capital that you have available to trade with. It's usually as a percentage. And usually that percentage is 1%. So 1%, maybe 2% of your capital per trade. And this percentage varies on your strategy. I've got a strategy that trades relatively frequently. So 1 to 2% is fine, a small percentage by any measure. And I can make it up by frequency of numbers. Now, if you've got so that high frequency, so if you've got a low frequency strategy, then maybe you will go 4% to 6% of your account equity. Maybe you've got a strategy that trades once a month, once a quarter, once a year. And maybe if it's once a year, you might go up to, that 10 to 20% level. So depending on the frequency would determine the percentage. Again, I fall into this category. My strategies are generally pretty frequent. I can typically find something to trade every day. So I'm falling into this category, the top one. Now, what I would then add is when you first start out, that 1% of your account equity, that's a low number. It's a small per trade risk. But the reality is, when you start out, you want to be thinking about the mindset of the trade. And everyone has a practical bank balance, and that's relative to your current personal and unique situation. But the reality is that your mindset has a low bank balance. So let's think about your practical bank balance, and let's think about your emotional bank balance. And this is why I'm going to say what's your number? What's your number? So practically, you may have that 1% figure. It could be 100, it could be a 500, it could be $10,000. You might be a multi-bajillionaire. $100,000 is 1% of your account equity available to trade. I'm exaggerating a silly number to emphasize the point. So 1%, it's your 1%. But the reality is, what if $100, $500, $1,000, whatever that 1% number is for you, what if that number that's pretty uncomfortable? What if that $500 per trade risk is, you know what, I'm not going to be happy if I lost $500 today. How do we work that number out? And this is the part that only you know what that number is. So what's your number? What are you going to be comfortable with? If I was to lose, and think about it in this, how little can I lose? If I lost 500 today, 500 tomorrow, and for the next 5 days on the run, if I lost 500 every day for the next 5 days, so 5 times, if that's uncomfortable for you, then 500 is not your number. 500 is not your number. It's going to be lower. It might be 300. So go through the process. If you lost 300 today, 300 tomorrow, and 300 for the next 5 days, every day for 5 days, and maybe it's like, okay, I'd be okay with a $1,500 loss in a week. If I lost $1,500 this week, okay, it's going to be painful, but you know what? I'd be able to put the next trade on the 6th day. And if that's an okay number, maybe we're getting closer to what your number is. But what we're looking for is, if I hit a run of bad trades, because let's face it, you will hit them. And I've never tried to blow wind in anyone's sail to say that you're going to have every trade's a winner. It's not. You're going to have winning streaks. You're going to have losing streaks. You're going to have mixed streaks. So let's account for the worst possible scenario. I have a losing streak. And if you hit one, let me rephrase, when you hit a losing streak, because it will happen. Again, remember, trading business is no different from a real business. Real business are having a losing streak for the last 8 months. Look at the world outside your window. The whole world is having a losing streak right now from an economic point of view. And there's some companies or some businesses that are on a winning streak because of all this situation. I don't know, people who sell bleach, masks, vendors. You get what I'm saying? You understand the principle in the real world. So the same thing's going to happen in the trading world. And what we're trying to figure out is, if I have that losing streak, what's the number that means that you can put the next trade on? Because that today's trade doesn't matter. Your ability from a mindset and emotional point of view to place the next trade is significantly more important than today's trade. Now, it's a little bit of an abstract concept, but does everyone get this? Does everyone understand? Just give me a little comment in the chat box. Does this resonate with you? How little can I lose? Practically, 1% may be okay and acceptable for you. But when you start out, start with what your number is. What's your number? I've seen multimillionaires cry over a $50 loss. Let me say that again. I've seen exceptionally wealthy people. They've figured out the rest of their life. And yet $50 is the straw that breaks the camel's back. So, and when it comes to trading, that was just unacceptable because their emotional bank balance was different from their physical, practical bank balance. So start off with what's your number and what's acceptable. And just times that by 5. If you lost 5 times that number this week, today even, the next 5 trades were just a losing trade. If that's painful, if that's going to keep you up at night, if that's going to be stressful, if that's going to be this is all bullshit, it doesn't work, if that's going to be your response, then the number that you've got's too big. You need to bring your emotional number up to meet the practical mindset. When those two things are in sync, then you can start to have that growth experience. You can start to grow your account. You can start to do the compounding thing. You can start to look at a percentage per trade on every trade and increase it accordingly, because your emotional bank balance is in line with your practical bank balance. And this is an important distinction. Again, we're talking about the mindset and the psychology of trading, but it's this that's going to keep you in the trading game for the next 20 years. This is what will keep you in the long haul. Perfect. Okay, so that's all I wanted to say. I said it would take 5 to 10 minutes. That's it. That's all I've got to say on the subject. It's really simple concept. It's probably the most important thing that you can ever do in any context. You know, what's an acceptable risk? Risk mitigation. If we were in the business world, that's the phrase that's touted around. That's, as a business owner, that's what's on everyone's mind. How can I mitigate the risk? How can I reduce the risk? How can I hedge the risk, offset the risk? That when any deal is being constructed, it's all about risk mitigation. New traders forget about it. They just throw it all out the window. But yeah, in the business, it makes sense. Of course, it makes sense. The trading business is no different. So a little bit abstract, but everyone gets it by the looks of reading the comments. A nice reminder: watch your number and stick with that number until it reaches the practical bank balance. Perfect. So follow-on question from that, actually. So Duncan, so do you have to go for a number? I would go for a dollar amount, Duncan. So practically, let's go back to this. So practically, the textbooks say, you know, a percentage of your account equity. And that percentage, let's just say that, you know, you're a high net worth individual and 1% of your account equity is $10,000. But today's your first, I'm kind of just trying to exaggerate it a little bit to emphasize the points. But let's say today's your first day. This is your first week, your first month, your first year trading. And you don't yet have a production line trading system. You don't have the confidence, you don't have the process, you don't have the system in place to run a successful trading business. But you need experience to get confidence with any process. So you've got to go and push the buttons. So what I'm suggesting is pick a number as a dollar amount. So practically it might be 1% equals 10,000, but your emotional bank balance might be $150. You know, your net worth has nothing to do with your emotional bank balance. You might have transferable skills, and that the first trade that you place might be $150, but very quickly you'll go, you know what, I'm okay with that. And it's 200, the next trade's 200, and the next trade's 300. You know, very quickly, if you've seen success in other areas of your life, this process of bringing your emotional bank balance up to your practical bank balance, that usually happens quite quickly. If you've not got business acumen, business experience, again, it's no reflection on you personally. Don't misconstrue the way that I'm describing this, because I'm not articulating this next part as well as what I could have done. But for some people, this process is a little bit slower. And again, it's not a reflection of you. It's just the nature of our psychology as humans. You know, maybe you're a little bit more conservative personality. So that process of increasing your emotional bank balance to match your practical percentage number of your net worth, of your account equity, that might be a little bit slow for some people. I mean, however fast or slow it is for you, that's exactly the right pace. So don't compare yourself to other people who have got big position size or small position size. It's just whatever the position size for you is exactly right for you right now. And that's what I mean by what's your number. It's what you're most comfortable with. Again, losing. If you lost that number 5 times on the run this week, you hit a losing streak, everything you touched was not great, and that 5 times that number, whatever that number is, if that's painful, if you would scream and rant and rave and you have sleepless nights, the number's too big. So you reduce the risk. And that's what we mean by what's your number? Again, I can't give you a specific number. Only you can answer it. But it's hopefully my description of how you go about it. Put a trade on. And if you put a trade on, and if you can't leave the trade alone, if you can't walk away for 5 minutes to put the kettle on, if you find yourself with sweaty palms, if you have emotional reaction like oh my god, oh my god, oh my god, will it work? Will it work? Will it work? Will it work? Will it? You know that voice that everyone's had at some point with a trade. Then if you having that, oh my god, oh my god, oh my god, oh my god, if you're having that emotional reaction, your position size is too big. Reduce your position size. Probably if you're having that reaction, if you're having palpitations, if the blood pressure is rising, you've got the sweaty palms, and you're watching every price fluctuation, if you're looking at your bank balance and go, it's up a dollar, down a dollar, up a dollar, down a dollar, your position size is too big. Your number is too big. So reduce the number that is the one. If you're going to hold it overnight, that would allow you to sleep like a baby. That's your number. And it's got nothing to do with your net worth. It's got nothing to do with your bank balance. It's your emotional ability to manage the trade. And this is what we're talking about this week. So I think we've nailed it. Thank you for the follow-up question, Duncan. I think it just allowed me to solidify my thoughts on this, but that's the process. And it's simple to explain. It's an easy concept to understand, but it's probably the most important thing. And again, it's going to keep you in this trading game long term. Okay, so we've done it a little bit backwards this week. We've had a look at our portfolio review. We've had a look at don't bet the farm. Nice and simple of approach. Think about the risk. How little can I lose as opposed to how much can I make? You manage the risk, you'll make the money. It's easy. It sounds easy when you say it that way. So let's finish off on the charts. The reason why we're all here. Okay, Phil, we get it. Show me the charts. Let's go. Quick drink. Okay. Right. You know where I'm going. You know where I'm going, folks. Top left. That's what I'm looking at. Whenever I first start to look at the charts, first thing that I do, I'm looking at the percentage, the net change of the futures. What's happened overnight? We've got about 2 minutes before the market opens as we're recording this. So it's probably going to be very accurate. And what I'm looking at is, has there been a big overnight movement? Was Asia romping away? Was Europe doing anything interesting? Because that might influence where the US opens. There's lots of news at the moment. There's lots of hype. There's lots of yo-yoing around. And then maybe when we look at the charts, maybe there's a big percentage move. The markets could have crashed overnight. So one of the things that we've been looking at is this area of the chart over the last few weeks. Let me just get the daily chart on in totality. There we go. So we've been looking at this area of the chart over the last few weeks and watching what may happen. And then we've been spotting this area here. So this, I'm just going to put a little thing. That was when the day that the markets crashed upwards 1,000 points. And we busted through 30,000 on the Dow. I know we're looking at the S&P, but that's where we busted through. So one of the things that we've been talking about over the last few weeks is until the high of that day, that big spike on the futures, until the high of that day is breached, then my viewpoint's been neutral and possibly even a little bit bearish. Now, that bearish downward movement, that's not unfolded. We've seen the neutral viewpoints, and there has been a slight bullish inclination. We're not romping away, but certainly we're above that high. I've got to be back to bullish, but we're not yet seeing anything significant in the way of movement despite breaking that high. Now, let's zoom in a little bit. One of the things that is concerning for me is that if we look at the pre-election, post-election, so we've got the pre-election romping, you know, the price volatility, that just look at the high-low range of the candles, big red candles, big green candles. Now, even in a little bit of the post-election, the height of the candles was comparable. There was price volatility. But what we're looking at over this last week, can everyone see that the heights, the bodies of the candles are very narrow? So we're seeing price compress. And this could be a good indication that there's going to be an explosive breakout. It's sometimes described as a coiled spring. Alibaba has actually got a good example on the 60-minute charts. Let me just get Alibaba up. because I was looking at this on my little pre-market scan, and everyone see that we've got that again, the little bit of the big rally, and we've got that teeny tiny. It's almost like a Russian doll pattern. Russian doll we've got the big candle, and then the next candle's inside that candle, the next candle's inside the previous one, the next candle's inside the previous one, the next candle's inside the previous one, which is inside the previous one, which is inside the previous one. So that's the same really tight flag pattern, a coiled spring. I like to think of that like a Russian doll, because every subsequent bar was inside the previous bar. So like a Russian doll, the bars, the bodies get smaller and smaller and smaller and smaller. And that's what we're seeing, or not quite in exactly the same way, but that's sorry, my platform's just decided to lock up. That's kind of like what we're seeing at the moment on, there we go, the markets. Let's go back to the S&P. So it could be highlighting the potential for a break. Again, we're looking at on the dailies, inside 1, 2, 3, inside, inside, inside. It's Friday. Will we see a breakout today? Will we see a big wide-ranging green bar or a wide-ranging red bar? Probably not. You know, we've got this consolidation, the same thing there. So it's a coiled spring looking very much like Alibaba. When it breaks, it's going to break. Now, when we go to the Dow, the 30,000 mark. Now, 30,000 on the futures has been danced with. There's 30,000. We're flirting with it again, but can everyone see we've got that, you know, wide-ranging bar there, and all of these bars are inside, inside, inside. So there's that Russian doll pattern that we were just talking about on Alibaba. We've got all those bars are inside that wide-ranging bar. So that for me it's a consolidation by any other name. So when we get above that, not necessarily 30,000, but when we can close above that wide-ranging candle there, that's going to be the green lights, for want of a better description, to say, you know what, it's probably going to like boff, boom. I'm discounting the big spike there. That was news driven, just in case you're wondering. We could apply the same logic to that candle, which is when it crashed upwards. All of these candles are inside that. So we can apply the same logic there. So we've got almost a consolidation within a consolidation. The consolidation there, and then we've got the consolidation there. The positive thing is it's consolidating at the highs. Consolidating at the highs. So one thing that you might anticipate is a bullish breakout. That would be a reasonable expectation. Now, we'll obviously find out when it happens, but the high of that needs to break. And if we go through 2950 on the Dow, then we'll be looking at the opposite scenario. It's possibly would drop to 2850. 28,500 rather. So that would be the kind of the two scenarios. If it goes above the current consolidation high, we're going to be looking at probably a very explosive breakout to the upside. You'll probably see it in the news. Everyone's going to be talking about Dow 30,000. Yeah, convincing break, blah, blah, blah. Like, let price dictate. You know, we'll find out what happens when it happens. I don't really care the why. It's probably going to be news driven, or it's going to be the Fed printing more money. Who knows? The COVID cure is on everyone's mind at the moment. So maybe something related to that, if it's going to be a news driven that just event that tips it over. If we don't get that, then 29,500. If that's breached, then we could see price move 1,000 points down, and it's still technically in that consolidation. What might trigger that? The lack of no convincing cure ahead of Christmas might be some bullshit that the media makes up. I don't know. We'll find out when it happens. But they're the two scenarios. It's either going to go up or down. And right now it's already going sideways. So there's the third scenario. It's either going to go up, down, or sideways. It's already going sideways. So until price moves beyond those barrier points, then price is going to continue doing what it's doing, which is up a day, down a day, up a day, down a day. So this is going to continue. So is it now the time to get involved in futures, in SPY, on an ETF swing trade? Probably not. We don't need to worry about it just yet. but it could be interesting. So when it goes, I would imagine it's going to be like Alibaba. It's going to go hard and fast. And we go back to Alibaba. Why are we looking at Alibaba? You know, it's not a future. It's an individual stock, but we can see that same pattern, and the market's just open. We can see that explosive movement happen on the 60-minute chart. We've got that same coiled spring pattern, the inside, multiple inside bars, and then it gaps, it explodes. And again, just before that big green bar here, you see the same pattern there. You see the same pattern there where we've got multiple inside bars. Again, before the big gaps, multiple inside bars, then the big gap. You know, big wide ranging bar, multiple inside bars, then the big move. So it's the same principle. It's that coiled spring. Think about it like compression, and then it gets released, pop. When it goes, it's probably going to go fast. There we go. That's what I'm expecting. So until those boundary levels are breached, then let's not worry about it. So that's my, again, what I'm expecting, again, from a swing trade, certainly from the market's point of view, which is waiting. I've still got a moderately neutral viewpoint in the very short term. Ultimately, prices going up, bullish in the medium term. And from a fundamental, from a just look outside the window point of view, I've never been more bearish. There's such a divide between Wall Street and Main Street. I sound like a stuck record, but a little bit of common sense here. The Wall Street and Main Street, there's two very different things going on. If we just looked at the charts, we'd be thinking, yeah, there's nothing wrong. The economy is the best it's ever been. It's the healthiest it's ever been. The stocks only go up, stonks, buy the dip. Fed's printing money. The stocks never go down. You know, jobs being created hand over fist. Companies are grow. The stock market is not a reflection of the economy. But if we just look at the stock market, that's what we would ordinarily presume, that the economy's very healthy. Personally, I don't think it is. But stocks are doing what they're doing. That's how we make our money. That's how we make our mainstay. But so in the short term, they're going up, follow the money. From a fundamental point of view, you know, bears beware, look out below. It's going to happen. Back in prior to the financial crash, the 2008 crash, I spent 2 years, I was running live trading rooms. I spent 2 years talking about the 2008 crash. For 2 years, it was, does no one see what we see? Does no one see what we see? And then 2 years, we were talking about just waiting for the crash, which every day we're just waiting for the crash. So that, I appreciate I sound like a stuck record. And for anyone who's followed me for any length of time, I appreciate that it's not the first time you've seen me like this. I've never been more bearish. The last time I was this bearish was prior to the 2008. I thought we'd had the crash earlier this year that I was expecting. The way things are looking, that could be it just could be the start of things to come. Again, tinfoil helmet, fully on, conspiracy theory, whatever you want to call it. There's just two different things going on. There's just two different worlds going on at the moment. Anyway, with that said, let's think about stocks to trade. One of my focuses right now, as most of you have probably guessed in the last few weeks, is short-term trading. I'm finding a lot of activity and interest from the basically just the morning move. So one of the things that I like to do, and usually I'll do this before the market opens, but I can have a little look at what's moving and what's shaking. I'll usually look at the pre-market volume. So this is the current volume for the day. Obviously the market's open. We're about 10 minutes into the day. Now, I can't necessarily do that now because obviously we're open. But what I can do is you can pretty much do the same or similar scan and look at a percentage change. And what we're looking for stonks, for a better description, bull stonks and bear stonks. I'm just looking for things that are active. A general benchmark. I don't know if you saw me do that. I've got in my universe of stocks here, and this is available if you want to go to my website and just go to the blog. There's an article about best stocks. It should be at the top of the list. You can go and get a copy of this if you want. It's all there. It's freely available. But all I'm looking for is like the most liquid stocks with options. That's really at its most basic. That's what I'm doing. So what I've done is I've just sorted the net change as a percentage. And usually I'm looking for anything above or below 2%. So right now, you've seen over the last several weeks, I normally do this before the markets, and we normally do this first. So I've intentionally just delayed doing it this week, because you can do the same thing when the market opens, and you can just find, hey, these things are moving. Now, this is because the market's open. This is going to be in constant flux. So this is something that you could do every, 5-10 minutes. You can possibly set your stock list to auto sort every 5 or 10 seconds, and you can pretty much have a list of the top 10 bear moves for the morning, the top 10 bull moves for the morning. You can certainly do that and find interesting stocks to trade. And depending on your software, the tools that you use, you could quite likely find stocks that have had a big percentage gap and have retraced. TradeStation can do that. I don't need to do that right now. It's not something that I need to kind of go into the bowels of doing, because I only want to scan my little universe of stocks. So I've sorted them all by the negative, and they were all 2%. But now that I've got them sorted, PHM is now above 2% instead of, sorry, minus 2%. It's now 1.9. So it's having a little bit of retracements. So it's just easy for me to go to look at that stock. It was below 2%. Again, I only need to look at the top 10, so I don't need to look at all of these. But just look at the top 10, and I can find, okay, anything that was down a moment ago is now having a little bit of a kickback. So Ulta was more than 2% a moment ago, down 2%. It's now having a little bit of a retracement. So it just helps me to find potential candidates. If you want to go and have a look at the top 10 leaders and laggers, for want of a better description, you could very quickly just skim down and just look at the top 10. All I'm doing, I'm going through this at the speed at which I would go through. And again, what I'm looking for, is there a big move? This is the 5-minute chart bottom left. Is there a big move? Then I'm going to look at the daily and look at it in context. And it's still inside yesterday. So that move is, maybe I don't need to worry about it just yet. I'm looking for breakouts. I'm looking for stocks that are moving and shaking. Again, I'm on Lennar. It's having a big percentage move. It's inside its daily consolidation right there. So there's a little bit of a down move, but it's not out of its consolidation. So maybe I just skip over that. Again, I can normally find something to trade before the market's open, but what if you don't have a chance to do it? This is what I would do. Just go and have a little look at the stocks that are moving, the stocks that are shaking, and you can just get a feel for the top 10 movers. And what I'm thinking is, look, now we're in the top 10. There's only a few 1% down 1% stocks. And what I do know is that there's lots of green stocks. The market's up small on the futures. We've already seen that, but we've got lots of candidates on the bull side. So maybe we want to focus our attention there. Now, one thing that does catch my attention is that we've got DocuSign here. Can everyone see that DocuSign, its volume today is 4.7 million. Its average volume is 3.7. So it's also had earnings yesterday. So something crazy is going on here. It looks interesting. Now that might be the one. So I'm just casting my eye down, and that's the one that kind of jumped out for me. Now you can find this type of stock before the market opens, but you can also see that, hey, maybe something interesting is happening. So I can look down is there any earnings? Okay, there's nothing there. So except with DocuSign, I can see that volume is bigger than its average volume. So let's go and take a look there. So again, if you don't do the pre-market scan, then you can do it just after the market opens. Does everyone get this? Again, we've usually focused on the doing this before the market opens. But what we can see here is that the stock has gapped above this consolidation. So now this is looking really interesting. This is looking super interesting. So daily gap and go is what we might be thinking. Looking at the 5-minute chart, post-market yesterday with the earnings is there. So we're above the yesterday's after hours trading. We've got the pre-market right now. So we're right above the pre-market trading. So this could be really interesting. We've got price just pausing briefly for the moment, and it could be on for its next push higher. So DocuSign looks super interesting. Now, reason why this one is more interesting than others is because of this break. Again, you remember when we look at some of the other stocks, they were trending intraday, but they weren't going out of this range that we've seen on many stocks in the last several weeks. So this could be a good breakout triggered by the news, its earnings, and we're looking for confirmation of movements. And as well as a day trade for me, I could possibly tap on a swing trade. It's breaking out of the range. Where could it get to? Look up and left and previous high here. And that previous move, it could go from where we are now, about $255, all the way up to $285. It's possible. It could go further, but there's not, looking up and left, there's nothing really in its way until it gets there. So it could be a nice little swing trade for a few days. At the very least, I'm going to have an awesome day trade. There's a good opportunity for some profits, at least in the next 30 to 90 minutes, which is what I'm looking for. And possibly I can tap on a swing trade onto this. Let me just pause there. Does that make sense, folks? It's how do we find like now trades? How do we find the best possible trade right this second? And this kind of looks interesting for me. Just looking at the current volume, see if there's anything that is out the gates like DocuSign that has greater than average volume. COP, close contender. I was going to say close contender. I just misread it. It was 900,000 versus 12 million. I thought it was 1.2. But yeah, I'm just seeing if there's anything that's exceptional. Nothing really in the active market, nothing that's catching my attention. There's certainly lots of movers and shakers from a percentage point of view. And again, same process. If you want to go down and you just want to have a little visual scan, you can certainly see the HFC, Hollywell Frontier. Oh, actually, it's trending upwards, breaking new highs, breaking through yesterday's highs. Again, that could be interesting. So speed with which I would do this is a little bit slower than what I would do because I'm doing the recording and it's just slowing my computer down. And obviously we're doing our session today, but you can go and just press enter and skip through the charts and have a very quick look. And we're looking for something that looks like because we've got a frame of reference now. DocuSign is the benchmark. I'm looking for DocuSign, another stock like DocuSign. On the daily charts is maybe breaking new highs or it's changing trend direction. Maybe it's gapping above red days, above resistance or below supports. I'm just looking for something that is in the context of things that I would normally look for. Buy the dip, sell the rally, or maybe SKX. Look at that. Does this stock look like DocuSign? Range. It's not gapped, it's traded through the range. There's the range on the 5-minute chart. There's the range on the 60-minute chart. Oops. There's a thrust move. That's momentum. Great. Buy the dip on the breakouts. I'm going to add SKX. So maybe even if I just want day trades, SKX, I can add SKX to my temporary watch list, not just for today, but maybe I can keep an eye on this for a week, 2 weeks, because it's, even if I don't plan on swing trading, maybe you don't want to, maybe you don't want to hold overnight. I don't know what your reason for not doing it would be, but there's people out there that don't want to hold overnight. There's people that don't want to day trade, and that's cool. My focus right now at the moment is day trading, but I can also chop and change. I can find swing trading opportunities by using a day trade scan. I can use swing trading scans to find day trading opportunities. And I can choose the strategy that I want to use to profit from that opportunity that makes sense to you and your personal, unique situation. So just because we've got different scans and, okay, this is a day trade strategy and this is a swing trade strategy, it's all one strategy. It's all the same scan. I'm looking for opportunity. What's going to give me the best bang for buck? And if I'm doing the day trade scan, I can find swing trade opportunities in just the same way. And then now it's on my, this looks interesting list, my short list, the stocks that I'm going to check into. MU, Micron Tech. This is a rally in an uptrend. Maybe I don't have that on my shortlist. Maybe it's overextended. Maybe I've missed the boat on this. Maybe $55 with the same logic was the breakout point to get involved with. And this is when we can add it onto the temporary watch list. I've missed the boat on that one. I'm going to let that one go. Let's not worry about it. Now I'm looking at this. What catches my attention here as I'm just skipping through the charts? I'm looking at the daily, the 60. So daily, 60, and 5 here. So I'm looking at all of these at the same time. Now, what catches my attention, we've got a rally here, but we've got a consolidation for a week or more. We've got a 60-minute consolidation. Now, will it be a swing trade? It might provide a swing trade, but it's looking like it's going to, at the very least, be a breakout in the short term. I get paid at the end of the week. Maybe I can swing it for 2, 3, 4, 5 days. It's got a smaller target. Maybe I can use it to get positioned on what could be a longer term trend or a direction change on the bullish side of things. Maybe I just want to focus on the 5-minute chart, the 5-minute entry, but then add this to my temporary watch list and see if there's a day trade on it for the next 5, 10, 20 days. So we can find great opportunities. Depending on your strategy, do you want to swing it for a month? Do you want to swing it for a week? Do you want to swing it for an hour? Your strategy is going to dictate what you do, but there's the opportunity. Citigroup, put it on your watch list. Your strategy is going to dictate what you do with it next. Does that make sense? So we can find great opportunities. We can all find the same opportunity, but your entry strategy and trade management strategy is going to determine how you as an individual will profit from it. Does that make sense? A little bit, I was going to say a little bit abstract. It's not abstract, but it's relative to your situation is all I'm trying to get to. Again, all we're doing is I'm just looking for something to just skip down the list, maybe find some extra trades. It's Friday. Just trying to illustrate, one of the things that we may do. Obviously, we're doing this session today, so I'm spending a little bit more time at the desk than I might ordinarily do. And it just means that I can skip through the chart. I don't need to look at every chart every day, all of the time. Maybe I do this once or twice a week, and I can say, oh, well, there's a swing trade. I'll add that to the temporary watch list, and I'll just circle back on it. I can still do my pre-market scan in the usual way. And what I'll end up with, certainly for my short-term stuff, is I'm going to end up with 5 to 10 stocks. That's all I'm looking for. I'm looking for 5 to 10 opportunities. So the big chart now, the big chart's now the 5-minute chart, daily's top left, and the 60, because I'm now planning on trading. My focus, my attention for day trading is going to be on the 5 minutes. Whereas when I was scanning, my focus, the big chart was the daily. You saw that in the background, and I want to evaluate the landscape. So now that that's done, I've got my watch list, and I can start basically skipping through. I've got my call list, looking for opportunities, looking for day trades. Microsoft is looking like it's trending nicely. Again, these are stocks that I'm going to look at on a daily, regular basis. Facebook's looking interesting. QCOM's looking interesting. They're all starting to do that potential morning movements. CRM, not really doing anything interesting for the moment. It's up a bar, down a bar. So I don't need to worry about that. It's been great trading this week. That CRM, let's go back to CRM. CRM highlighted using the same scan that we normally go through. Early in the week, we've had multiple trades on it this week. We've seen some examples of that earlier. In fact, let's go back to it. We've had multiple trades on CRM this week. There we go, CRM. So we've had a trade earlier this week. So there's another trade that we had. Just a quick $500. And my other trade on this one was about $920. And again, we've got the daily trend yesterday. Again, broke statements on the screen there. So we've had a couple of good trades on this. It's been great this week. It was found in the usual way by looking for those gapping stocks that we normally look at on a Friday. But right now, it's not doing anything interesting. Up a bar, down a bar, there's no further momentum for the moment. Maybe I don't need to worry about it. Spelunk, big gap. Big gap yesterday, 40%. Wow. No, sorry, 20% it was. $40, 20% move, big gap. I would imagine that this is just going to pause and rest for a day or two. I'm going to keep an eye on this for a few days. Maybe there's some follow through, either up or down. I'm only looking for the day trade with it. But it doesn't look like it's setting up right now, so let's not worry about it. Alibaba was one of the stocks that I was looking at. This had huge pre-market volume. It's a little bit spotty, a little bit patchy. It's not meeting my usual entry requirements. BA, nearly said British Airways. I do this every time. Boeing, looking interesting. Lots of pre-market activity. It's been something we commented on last week as being a possible swing trade. It's been on the watch list for several days. DocuSign we've already got on. And with our scan from just a moment ago, we found SKX to trade. Again, that's looking interesting. DocuSign, SKX are bonus trades. They're not on my usual call list, but because there's a swing trade potential, I may just keep them on there like CRM for a few days into next week, maybe a bit longer. Maybe they'll still be on next Friday. But I'm just looking to take advantage of the heightened interest in these stocks, at the very least for a day trade. More specifically, to get paid in the next 90 minutes. I'm going to open a trade, I'm going to close it, usually within 1 to 2 hours. And that's the potential that I'm looking for. And that's what these last few stocks that we've looked at are offering up. Right, folks, I think we're just on the hour. Let me just remind us again. Let's just go through. These are this week's trades. We found Apple in the same way. I'm looking for these types of opportunities. And again, we've got some student success wins as well. And then we've got CRM that we just went through. So these are the short-term trade opportunities that we're generally looking at. And if you want a little bit of help with this strategy, it's the VWAP, volume weighted average price, is the indicator that I use to help with some of these patterns and footprints. We're looking for institutional money flow. We talk about them once a week, but I started this week doing a live over-the-shoulder trading. And again, if you want some help with that, I don't know if what we do is right for you. I say this quite honestly every week. It might not be right for you, but if you think it may be, let's talk. If you want to learn in the smartest possible way, the fastest way to learn anything is to follow in the footsteps of someone who's already done it, who's already figured it out. Broadly speaking, it's one simple pattern. There's actually 9 variations of this pattern. I'm going to go through those 9 variations today for our insiders in about an hour and a half's time. I'm going to go through those 9 variations in a live over-the-shoulder workshop. We went through the TTE management in detail yesterday. So every day we're going through all of these elements. Monday, we go through the setup. Tuesday, we go through how to place the trade. Wednesday, we practice. Thursday, we go through the TTE management. And then on Friday, later today, I'm going to expand on the 9 different patterns. It's a variation of the one pattern, the master pattern, the classic pattern. You've seen it 100 times in the last several weeks. But we're going to go through all the variations and the way that we can profit from that pattern. And once you master it, you will have, you'll see success, you'll see results. You know, I'm here to help you, but we'll be over the shoulder. And again, maybe you'll be one of the success stories that I'm talking about every week. You won't be stressing over what the markets are doing, up or down. You're going to make money. You won't be spending hours flicking through it. Despite what we did a moment ago, you're not going to be spending hours doing it. We spent maybe 10 minutes flicking through charts, but you're not going to be spending hours doing it. We're going to zero in on the exact trading opportunity, as we did with SKX, as we did with DocuSign. We zeroed in on it very quickly, and that's all I need to look at. So I'm going to wait for an entry, and you'll never be reading boring company reports unless you want to. I know people who like reading them. I personally don't. So if you want to, you can do. It's not essential. So if you want help with your trading, send me a message. As I said a moment ago, I don't know if what I do is right for you, but if you think it may be, let's talk. Send me an email, phil@antivestor.com. Tell me a little bit about your current situation. And if it is right for you, if you think it may be right, general criteria is if you've got about 60 to 90 minutes first thing in the morning, like we normally do on these weekly workshops, if you've got about an hour, hour and a half every day at the start of the open, then it might be right for you. And if you think it is, send me an email. We can talk about it a little bit more. That's it. That's my shameless presentation done with. This week, it was watch your number. And a final thought, let's just leave it with capital preservation. Think about how little you can lose as opposed to how much money you can make. If you have a robust strategy and you apply it with consistency, just like any regular business, then you will have the opportunity to see consistent rewards. So what you need to do is keep your risk profile low, and the rewards will follow. So that's what we talked about earlier with what's your number. Folks, thank you very much for your time. Thank you very much for your attention. It's always a pleasure. Thank you for some of the questions. I see that there's one or two that I've missed there. As usual, I'll hang around for the next 5 or 10 minutes just to answer those that need an answer. The recording for this will be up in the Slack group in about 20 to 30 minutes. And the Friday session for our over-the-shoulder training will happen in about an hour's time. So if you're there, I'll see you there. If you're not, maybe I'll see you on Monday's session when we start it all over again. Once again, thank you for your time. I'll see you all next week. Maybe I'll see you on Monday if you're joining us for the over-the-shoulder training. Till then, bye for now.